Joining me now to provide insight on the day's market performance is Viv Govender from Rand Swiss Offshore. Viv, thanks so much for your time this afternoon. So trade remains choppy at the top of the week. Stocks really mixed. Meanwhile, there are reports that the UK and the EU have reached a post-Brexit deal. I mean, the UK's economy has really suffered following the exit from the EU, and a reset in relations would likely give it a boost. Right?
Yes, it would. Look, I mean, the UK obviously suffered quite a bit of a disruption after Brexit. But remember, if you look at UK growth rates, in fact, European growth rates post-2008. In 2008, the UK, Europe, etc., were pretty close to the US. Over the last decade, almost 2 decades right now, it's 2025, so we're talking approaching 2 decades. We have seen the UK and Europe basically lag US growth rates quite significantly. And so, yeah, Brexit was not a great thing, but it was just part of a trend, I think, obviously steeping the trend that was started just after the financial crisis. And I think hopefully if we can get a bit of a reset happening with regards to trade with Europe, you could see some spark happening in the UK. Unfortunately, I do think that the current government in the UK is at the moment not really pushing forward policies that are pro-business.
Yeah.
It is a more left-wing government, and I don't think it's going to be enough to change the course for the UK at the moment.
And we'll keep an eye on developments on that front as EU officials are in the UK this week. Let's move over to some company news, kicking things off with Vodacom. Earnings up there, up 1.3%. Egypt and Tanzania outperformers over the period. But the group, of course, still dealing with those currency volatility issues as well as hyperinflation. What have you made of that performance, particularly what's been playing out in the second half, as that half was what really boosted the company?
Yeah, look, I mean, I think if we come to the voice sector, so the cell sector or the mobile sector, you know, MTN and Vodacom are both dealing with the same issue, which is basically a maturing market or a maturing industry, quite frankly. And they are trying to find ways around it. There's 2 possible ways to go around this thing. One is to go to areas that are not quite as well served, you know, and that's been, you know, mixed bag for places like MTN as well as you can see Vodacom as well. You know, there are obviously more opportunities, more growth possibilities happening in places that are a bit more, you know, underdeveloped. But at the same time, they do come along with the issues like, you know, currencies as well as like the regulatory issues that MTN has faced. Then at the same time, you could also go and, you know, look at new marketplaces or new market segments, you know, financials, you know, which goes services, etc. I think that might be a thing that both these companies are going to be looking for going forward. I think they've been reasonably successful, maybe not in South Africa as they are elsewhere in Africa, but I do think that that probably has a lot more upside than trying to just, you know, go to some of these markets that have all these upside and downside risk as well.
I mean, you think of the growth we've been seeing in M-Pesa, and you can see, you know, the trajectory that comes with, or the growth trajectory that will follow through when looking at, you know, diversifying revenue streams, particularly in that financial services industry, right, Viv?
No, yeah, most certainly. I mean, think about it. These guys started off as basically text and voice companies. You know, that was the service they offered back in the 1990s. Right now, those are 2 industries that are, or 2 sectors that are virtually dead. You know, voice growth and text growth has basically gone to zilch. It's all about data, if you're looking at mobile. And then that's also like you're going to chop off. I mean, there's only so much data people need, and you know, with the kind of growth rates in terms of like the price versus how much is being, you know, offered, you know, in terms of like gigabytes, etc. I think most you know, consumers out there have what they need at the moment. So yeah, you have to look at other services. You have to look at financial services. Look at other, you know, over-the-top services that these companies can provide.
All right, let's move over to Famous Brands. That group delivering a near 12% rise in earnings, but the group remaining cautiously optimistic about its prospects, rather, on the back of, you know, macroeconomic issues, and we're also seeing, you know, a consumer that remains budget conscious.
Yeah, most certainly. But look, the South African consumer has always surprised me to the upside. It's amazing how resilient people are in South Africa when it comes to spending money. And so, yeah, it is an amazing, you know, fact to look at that, you know, when we're talking about 1.5% growth rates, if that, in South Africa, these companies are able to do double-digit growth rates, which is, you know, indicative of just how strong consumer, you know, demand is, despite the fact that, you know, obviously, income coming in, etc., is under pressure. how long this continues, like I said, it's always surprised, on the upside. So you'd always be surprised by just how well willing consumers are to spend money on what you consider to be reasonably luxury goods.
And over in the private healthcare sector, Netcare delivering a 5.3% rise in revenue. PPD also up just over 1%. Viv, just take us through your analysis of those numbers.
Yeah, look, I mean, obviously another sector that's obviously facing some challenges. And I think we also must take into account what's happening in the US with regards to that drug, issues. What Trump has done is basically say that countries that are getting a better deal in the US cannot get that better deal anymore, with a couple of exceptions. I don't think we'll make the exception list, quite frankly, considering his attitude towards us. In which case, you're going to be finding, healthcare costs probably under a bit of pressure going forward, especially in the pharmaceutical sector, which is just going to be costs that are, others are going to basically be able to get the revenue for, but companies like Netcare, etc., are probably going to have to just be dealing with the extras, cost to their business model. So I do think that, reasonable results, but looking forward, and not even talking about things like the NHI, etc., in South Africa.
Yeah, and let's move over to an industry where it seems like there is headway, the second-hand vehicle market, and we have We Buy Car out with results on that front. They've really been, benefiting from consumers that are shopping down when it comes to cars, right?
Yeah, most certainly. And also, look, I mean, here's the thing. Prior to these online retailers for cars, you would go to buy a used car either by somebody in the classifieds, when they still existed, quite frankly, or to car dealerships that had, used cars or trade-ins and so on. And often you wouldn't be able to get, a proper valuation on what the kind of the car you were getting, etc. So they've gone into a market providing information to consumers and providing a service that I think consumers are finding valuable. So I do think that's, obviously one of the reasons for their success. And also, I mean, South Africans, do buy cars, but they buy a lot more used cars. They keep them a lot longer than other parts of the world.
Yeah.
Like in the UK or in the US, etc. So I think this is an industry that obviously has a upside, even when consumers are under pressure.
All right, before we move on to your stock pick, Viv, let's take a moment to touch on some counters that have been attracting interest from your industry peers.
I'm sticking with Google. I recommended it a while ago, but I remain optimistic about it. I think it is a business that's got lots of sunk costs in R&D to develop things like automotive sector, the flying cars, also the data centers. They certainly have a lot more opportunity to monetize than many other businesses. They highly dependent on advertising, but they lag behind the others in terms of valuation. So I think that it offers a good opportunity at this stage.
I'm picking chicken, so I prefer Astral Chicken. I mean, they had this trading update. The market didn't like it. I think the market didn't read it right. But when I'm looking into the second half and into next year, I've seen that they're getting better chicken prices, better chicken prices, and their raw material costs are actually falling. So when you combine those two, I think there's solid margin support. You've got good top line growth, and you're coming off quite a low valuation. So I think the outlook for Astro over the next 12 months is quite solid.
So Roy, going with Astral, that company out with results today, and I think earnings were down almost 50%. And in the meantime, Zwelakhe going with a tech counter, Google. Just your analysis on those stocks, Viv?
Yeah, but Google, I mean, it's facing the innovator's dilemma. Quite frankly, it was Microsoft faced, a couple of decades ago. They have a business, more than half their business, which is search, but they have a new technology, which they helped create, quite frankly. AI is primarily a Google invention. That's going to eat into that search business quite strongly, and they have to decide just how much to promote AI while basically cannibalizing their search business, which, like I said, is a huge business. We're talking, tens of billions of dollars. I think the overall Google revenue is over $100 billion in revenue per quarter, and more than half of it, like I said, comes from search. So I think that is a huge, dilemma the company has to basically go through. At the same time, as mentioned, R&D at the company is magnificent. Waymo is probably more valuable than Uber. YouTube is probably more valuable than Netflix. And there's other things in that company that are extremely, important. Like, for instance, DeepMind is at least probably as valuable as OpenAI. So yeah, challenges, but I think a good company going forward. With Astral, I do think the issue with that company is the fact that quite frankly, the cost structure is just going to be very, very volatile due to like climate change and other factors going forward. And you've seen that over the last few years, what used to be a reasonably consistent pricing structure coming in has been much more volatile than it has been historically, just because of diseases and climate change.
And where are you seeing opportunity at the moment? What's your stock pick?
I'm looking at Microsoft. I still think that company is, got a really good eye on AI. If you're looking at the AI, industry going forward, Nvidia, Google, of course, Microsoft are probably things that you probably have to buy in terms of this marketplace. And they've, managed to monetize that business quite nicely. And, they've seen even internal efficiencies coming through. Just in the last couple of weeks, I think they've fired over 5% of their programmers just because they're able to replace them with AI, apps, or however you say it, which shows that they are actually seeing efficiency gains, which will obviously pull to the rest of the economy, and Google will make money off that. Microsoft will make money off that as well.
All right, Viv, let's leave it there. Thanks so much for your time and joining us to share analysis of trade at midday. That was Viv Govender from Rand Swiss Offshore.